Okay, good evening. Today is April 23rd, 2017, and this is a Sunday. This is the day before the market opens. Actually, market already opened over in other parts of the world. Um, I want to get started with where I left off at last week. I believe last Wednesday I posted, and this is the Euro Aussie. If you see on my top left, this is a daily chart. I believe when I posted last week, we were right in this particular area here, and I had said that prices would find some resistance at 0.618, and as you can see, it just went just above 0.618, which is a Fibonacci number, and it bounced down, or it bounced off of that particular resistance, and it came down a little bit. But I'd also said, if you go back and look, that I was looking for prices to really find its resistance by about that 100% mark, which is around 4,500. A few hours ago, at the open, the euro just took off up in pretty much every euro market, currency market. The good thing is that I was in about 3 of those markets, and you talk about some good numbers. As you can see here, 324 pips, and it actually has went down. I've already taken some profits out. I was actually one full contract in this, and now I'm at a half of a contract, because once it got to about right here, I kind of watched it kind of bounce down, and I had a feeling it was going to start coming down, so I jumped out half. And I think what's going to happen is it's going to find some support right here at around 43, and possibly I may add back, but it may come back down a little bit. But I have this as only as wave 3, really, because as you can see, this gap right here, those gaps on the Elliott terms are only found to be seen in threes. So if this is the case, then this is a 1, 2, 3. Then you'll see a 4 about right here. It shouldn't go below enter this territory basically of the wave 1. And if it did, or sorry, if it did, it invalidated, but it shouldn't, and then it should go back up, and then it will find its resistance. I'm saying around 45, a little between 41.45, 50, give or take. This is all just speculations, though, just based off of Elliott wave analysis. So enough on that. This is a long-term trade, so I'll just continue to update this particular market 2 to 3 times a week. I try not to go any lower than a 4-hour chart, because technically, I mean, just to take a position, you do want to look and see where is the best entry at on a small time frame. But if you're really trading long term, then the best strategy is to have multiple markets, and you're really taking maybe 6 total trades a year, if that. I'm kind of swinging in and out of them here and there, which is good, because this market this year hasn't been the greatest. But if you can pull 300 plus ticks off of one market, and only have about 3 years of trading experience, then I'm doing something right, and that's just how I look at it. On to the euro yen. As you can see here, I got in here. I had this as a 1 here, and as a 2, a 1 here, and a 2 there. I actually got in as this had went down here, and I got in right at the bottom of that. As you can see, I'm up 304 ticks. So this is 2 markets right now, and it's over 600 ticks just on euro trades alone. But I have this as 1, a 2. This is also gapped up, so this is a 3. I believe the 4 is going to find some support right about a 118.90 or so, and then wave 5 of let me see. Let me go back on that one. So how I have this is a 1, a 2, a 3 here, a 4, a 5 for 1. I have a 3-way move, which will be a B, a C for a W, which is a double zigzag. I have also another 3-way move, a B, a C for an X. And then I have an A here, a B here, a C, a Y for 2. Now, I have this as a 1, I have this as a 2, I have this as a 3, Yeah, I need to label this actually. But I have this, I'll label it in a second. But this is a 3, this is a 4, this is a 5 of 1. So 1, 2, 3, 4, 5 of a larger 1. Now I have an A, a B, a C, a W, an X, which will be A here, a B here, a C here for X, 3-wave move. And then you have an A here, a B here, and then you have a 1, 2, 3, 4, 5, C of Y of 2 on a larger time frame. So this is, let's see, a Y 2. So basically, so that you won't get it confused, this is the 1, 2, and then this will be 1, 2, and then you have 3, and then 4, and then you have 5 of 3 here. That's a 5-wave move for 3. Bam, you have a sharp to the downside of 4, which is close to the 4 of the previous degree. That's an Elliott rule, not a rule, but it's a guideline. And then you can have a 1, a 2, a 3, a 4, and a 5 for 1. Now, you would think that this will be a 3. I originally had this as a 3. So before I had this as a 1, a 2, a 3, and then we were working on wave 1. Or, I'm sorry, wave 4. The problem with wave 4 is that if this was a wave 4 coming all the way down here, it had already penetrated or entered the territory of wave 1 a long time ago. And what is that? That's a rule. Wave 4 must not enter the territory of wave 1. So it can enter here, but once it penetrated in this area, it had already invalidated that count. So I have this as a large 1. I have this as a deep retracement 2, which was basically, as you can see, it nailed that Fibonacci retracement of 1.382. I like, so what I did is to measure where wave 2 is likely to end, you take the top of 1. You go to from the top of 1 to the bottom of where it ended W, back to the top, and then you get the measurements, and then you just basically 100%. I'd like to do 100, 1.2, 123.6, and then 138.2 on the fib retracements. It normally tends to fall within the 100 to 123.6, but it can literally go deeper than that. It can go to 1.618, but I tend to see it in this particular area to where wave 2 would end. Or you can come here and measure this particular top to here, and then just go to from anywhere between 0.618, 76.4, or 78.6. So for example, if I come here to the top, and as you can see, my 0.618 is this line right here, which is 114.94, and as you can see, it went just low. So watch this so that you can get a better view of that. That was 0.618. I'm going to take off everything else. I'm going to move it to the right, to the extreme right, and look how it fell right on it. So literally right on it, to the point where the 0.618 here is just about the identical leg of this 138.2. That's pretty amazing when it comes to Fibonacci levels. So as you can see, I got to take this off so my charts aren't so messy. But as you can see now that I got it off, that this 1.382, so basically of this, and then if you go from here and you measure all of wave 1, 0.618, it was literally right on the money. So this is so far this is good for a wave 2. What that should tell you is if you know Elliott, then wave 3 must be at least 100% of wave 1. So let's do the math on that. Let's do, or speculation, I guess you could say, is likely to go just based off 100 percentile. So let's do this. Kind of short, but let's see. It wasn't really Fibonacci extensions. Let's do the extensions. So we're gonna go 1, 2, 2. And as you can see, just for it to be the length of wave 1, it needs to go to 129. So I definitely believe that I'm in a damn good trade for the long term, because it's likely to go 1.618 of wave 1. It tends to go 1.382. Normally rarely does it ever go 1.618, but just for a good measurement, you can at least see it go to 129. Right now, it just hit 120. So 900 more pips to go at the bare minimum if this is in fact wave 2. We'll keep an eye on it, and as you can see, the video doesn't lie. We're here now. So if it does shoot up to where I just had it, someone wants to call me out, well, we can go back to the video. I'll post it on that day. Last but not least, because I want to keep this brief, I want to show the Euro dollar and where I have it to go. Actually, and I'm going to show my Aussie as well. But basically, wave 4 ended here. This is wave 1 of 5. This is a W. This is an X. This can be 1, 2, 3. But I don't have this as a 4 because it already would have entered where I have the 1. So I have this as an A, a B, then a 1, 2, a 3. Then I have a 4 going to come here over the next few days or a week or so. And then you'll see wave 5 come to around this area. For wave 2 of 5, the trend is still down. But for the short term, you will see movement to the upside. Also, I want to end it on actually on the 60-minute on the Aussie. But on the Aussie 60 last Wednesday or Tuesday, I actually said that support will be found near 74.90. And it was actually in this particular area when I said it. As you can see here from my counts, as you can see that bar right here, it ended at 74.91. Now keep in mind, when I suggested this, it was already like right here at 75.23. It found its support literally a tick below or above where I said it will find its the support at. You don't believe me? Go back to the previous video of this and you'll see where price was at and then where it actually found support. That's why I had this as a W, a X, and then this is a 1, 2, 3, and then you're going to see maybe a 4 here, and then you're going to see a 5 here for Y. And Y of 2 will end somewhere in this area here. We shall see later. My stop is pretty much up here now, and it's more around 70. Yeah, I got it at 76.80, so I'm not too concerned with what it is right now. I've already taken profit. I took profit out here. I got back in when it was around here. I took profit at this support level because I knew the support. So this going up is just no big deal. I'll add on. I'm still in it, but I do take out contracts. I do want to leave it on that, end it on that, because I don't like my videos to go more than 5 or so minutes, and I believe this is well past 5 minutes. But this is just Sunday. Expect the euro to really, as of today, you can see that gap up. Expect it to kind of retrace itself over the next couple of days, and I believe we will see a lot of market volatility in the month of May, leading into the summer, basically before August hits. But just be careful if you guys are trading, and if you need to ask questions on certain markets, then I'll do it the best I can to actually help. Until then, I'll be posting another video in a few days. Hope this helped.